This is Car Chronicles Extra. Welcome to our weekly program where I, as a radio reporter, have the privilege of showing you what I've been covering the past week or so. And this has been a pretty busy week. We've got crash tests, we've got corporate earnings, and we start with a major move for Chrysler. It's probably no coincidence that the day that Chrysler made the announcement of its plans to restructure its government loans was the same day that CEO Sergio Marchionne took Treasury Secretary Timothy Geithner on a tour of Chrysler's Jefferson North plant. Now, Chrysler's going to take several more weeks to work out the details of the loans that will come from banks that 2 years ago wouldn't touch Chrysler. But Chrysler has now reached the point where it's considered a pretty good risk.
I think it's time to try and close the loop of what has been an incredibly necessary intervention, but which, given the state of the car industry in the United States in terms of overall volumes, the state of the capital markets in terms of availability of credit, make that support mechanism today redundant and unnecessary. And so I think we need to close that chapter. I think it would be a great accomplishment if we can get it all done within 2 years after we came out of bankruptcy.
The Treasury Secretary saying he wants the U.S. government out of both GM and Chrysler as soon as possible. And while they do want to recoup as much of the investment as possible, the real goal here was to save jobs. Marchionne says independence from the government should help Chrysler.
To be honest, I think that there's been some bias in the public perception about what has happened here back in 2009, but I don't think it's been lethal. There's not a single doubt in my mind that once we manage to repay the U.S. and Canadian governments, that we will, the perception of our brands and the perception of this house is going to improve.
Chrysler also posting its first quarterly profit since emerging from bankruptcy. $116 million for the first quarter. That's not huge, but it's a start. The last time the company posted a profit was back in 2006 when Chrysler was owned by Daimler. Ford, on the other hand, has been profitable for a while, and they continue to post impressive numbers. Ford posting a $2.6 billion first quarter profit, promising full-year earnings that will be better than the $6.6 billion that they made last year. But they also said because of increased costs and other issues, their other individual quarters may not be as profitable as the first one. But certainly the first quarter was a bounce back from the fourth quarter of 2010, which was a disappointment to many analysts.
In the fourth quarter, we were investing more in new products and our brand and the new launches and the facilities, and so that was a planned increase in investment or cost. And I think everybody understands that now. We didn't have a recurrence of that in the first quarter, so they can see the fundamental, the goodness of the operation.
What about higher gas prices? I know you've got a lot more fuel-efficient vehicles. Even the bigger vehicles are more fuel-efficient. But is there a risk out there that might have an impact on the overall economy?
Well, I think that, clearly commodities are a very important part of the economy, and oil prices are very important to the economy also. And so I think everybody is watching that and trying to assess what that means. I think most people believe it might be a little bit of a drag as we recover. But clearly we are continuing to recover, which is fantastic. And in Ford's case, we are probably in the best position that we have ever been in for the consumer.
Ford CEO Alan Mulally also saying that Ford has been able to pay down a significant amount of debt, and that lowers their interest costs. Now an update on some reports that we had heard earlier that the UAW is anxious to settle its contracts with the domestic three car makers before the deadline. That's something they have never done before.
We have made no commitments to anybody about settling early. It's, if it happens, it happens. That's never been the case. I don't know what will happen. But there's no commitment, there's no plan at this point to settle early. Relations are really good. We're going to try to problem solve, and there are a lot of problems to work through and a lot of issues to work through. So, I don't know whether it'd be very realistic to think that anything will get done early.
King did say what he would like to do is settle contracts with all three of the domestic automakers simultaneously, instead of doing the traditional UAW practice of choosing one company to take the lead and then trying to pattern that deal at the other two. But he admitted we're very early in the process and it's hard to tell exactly what is going to happen. Now let's move on to crash tests. And we've got some very good news for the first two electric cars. The Insurance Institute for Highway Safety naming both the Nissan Leaf and the Chevy Volt top safety picks, meaning both did well on all of the Institute's crash tests. The value of this is with skeptics who think of electric vehicles as being something less than a real car. But both Nissan and General Motors have long histories of knowing how to make safe vehicles.
The Volt and the Leaf were designed from the ground up to earn the Institute's Top Safety Pick Award. That means they need to be able to manage crash energy in the front without allowing intrusion into the occupant compartment. Means they need to have a strong roof to protect you in a rollover crash. Means they need to have strong pillars to protect you in a side impact crash, in addition to having side airbags with head protection, and also having electronic stability control.
By the way, there were also no issues with the electrical systems on either the Volt or the Leaf. They shut off as they were designed to do in a crash. Now that we've crashed cars, it's time to test drive one. The bottom line here is little wagons can be fun. Now the TSX is Acura's entry-level car. Now they've added a sport wagon trim. This is nothing like the ultra high-end, ultra-fast Cadillac CTS V-Wagon that we told you about a couple of weeks ago, but it's also less than half the price. So for a sticker in the low 30s, 201 horsepower is pretty decent, along with crisp handling, a pretty nice interior, and a sharp styling. And this also allows better fuel economy, staying around 30 miles per gallon on the highway. Now, it's not the most modern vehicle. For example, the navigation system not really available. And the rear cargo area is a bit tight, but there's also a nice cover for your stuff. Bottom line, if you want something sporty and different, the Acura TSX Sport Wagon is definitely worth a look. That's our program this week. We will be back next week with another look at the latest news and trends in the auto industry. I'm Auto Beat reporter Jeff Gilbert. Thanks so much for joining us.